Hey guys, it's Jimbo here, and today we're going to talk about one of the worst financial mistakes of 2020. In this story, an employee from Citibank sent off $900 million by mistake while working from home. He or she wanted to wire interest payments to creditors on behalf of REVLON, the borrower, but managed to wire the entire $900 million balance to these lenders instead. And in this whole process, Citibank was only supposed to act like a middleman. They were supposed to receive money from REVLON and then give the money to the lenders. But with a single click and a single mistake, they managed to pay off REVLON's entire debt balance. And this whole mess revealed some big internal control problems at Citibank. Basically, they don't seem like they have proper safeguards in place to prevent fatal mistakes like these. And it became obvious to me that multiple employees were probably responsible for the mistake. Someone out there accidentally submitted the transfer request. His or her coworker didn't properly review the request, and their supervisor even signed off. All these individuals probably assumed that someone else in this chain of command checked the amount, verified the recipients, and examined the dates. But as we can see, no one here really did their job, and the money that was sent was now gone, and that money went directly in the hands of about 40 creditors, including Brigade Capital, Highland Capital Management, Symphony Asset Management, and 37 others. And unfortunately for Citibank in this situation, even after multiple requests from their CEO, most of these creditors refused to give that money back. And this eventually led to 3 separate lawsuits, the first one between Citibank and Brigade Capital for $175 million, the second one between Citibank and PS Investment Partners and Symphony Asset Management for $243 million, and the final lawsuit between Citibank and 9 other smaller asset managers for $108 million. And what this really means for Citibank is that out of the $900 million mistake, only $374 million were returned, and the remaining $526 million still haven't made its way back to them. And you might be wondering why the money hasn't been returned in the first place. And it seems strange that so many of these lenders would decide to keep that amount for themselves. And to really make sense of the whole situation, we need to take a look at the borrower, which is REVLON. REVLON had borrowed $1.8 billion from these lenders back in 2016. It needed the money to restructure and improve their business, and they also wanted to purchase Elizabeth Arden for $900 million. You can say that this was an attempt at building a beauty empire when REVLON was seeing inconsistent profits, and the company here managed to convince 40 institutions and individuals to lend them money. They spoke about the synergy between the two beauty brands, the hidden value that might be unlocked. And for the most part, these lenders were convinced, and if they weren't totally convinced, REVLON even promised these creditors a collateral too. They offered name brands like American Crew and other drugstore brands to these lenders if anything were to go wrong. And to many of these lenders who were making a simple risk to return calculation gladly took the deal. What they saw from this deal were periodic interest payments, the return of their principal in a couple of years, and the possibility of profiting off the collateral in this situation if anything were to go wrong. And for the longest time since 2016, REVLON had kept their words to these creditors. And they pretty much did so until 2019 when things were looking grim for them. Their acquisition and restructuring didn't seem to pay off, and the company was losing money at record speeds. And this was when they decided to take drastic action. They took out an emergency loan, but this time REVLON was in a worse financial situation than it was in 2016, and creditors were unlikely to take another risk on this company. So REVLON did what it had to do. And through a sneaky legal loophole, and in an act of self-preservation, they took the collateral promised in 2016 and gave it to a new creditor, Aris Management Corp., who eventually ended up lending REVLON $200 million, effectively saving the company from bankruptcy. And the news of the loan sparked outrage among the old creditors, who just had their collaterals taken away from them, and who will now receive nothing if REVLON ever goes bust. And as a result of what REVLON did to them, many of these lenders decided to sue REVLON, and many of these court cases are still ongoing today. In the meantime, the makeup company is doing worse and worse as the days go on, even after this loan. REVLON's physical sales dipped because of the lockdown process, and their internet sales couldn't pick up the slack. And many of the lenders had simply expected to write off this loan because they really didn't think they were going to get their money back. And this was the case until the fatal mistake from Citibank when the tides shifted completely, and out of nowhere, their full balance was paid for on a lucky Friday afternoon. And most of the lenders, upon seeing this opportunity, decided to keep this cash, pretty much giving a big FU to Citibank and REVLON, resulting in a huge dispute between the two sides. And on the lender's side, their lawyers argue that a big institution like Citibank could not have possibly made a mistake like this. They were sophisticated with billions of dollars under management. And just that because their money arrived a bit early doesn't change the fact that it was owed to them in the first place. And on the other side of this dispute, Citibank's lawyers are arguing the opposite. They're saying that it's highly unlikely that a distressed company like REVLON would have the financial means to pay off this balance. And this whole situation was obviously a mistake. As of right now, all the cases I just mentioned are still ongoing. But the money sent, however, is currently frozen by a judge, meaning that it can't be withdrawn, transferred, or disposed of. But in my personal and honest opinion, it looks like Citibank will probably get their money back, because the money sent belonged to them, not REVLON, and not the creditors. They were simply caught in the perfect storm and are now paying the price. And I think through this whole lesson, Citibank is going to learn a lot about internal controls, whether they really want to or not. I'm sure the company will now update their loan processing systems at warp speed, because apparently the bank still uses old software from the 90s, and they were actually in the process of upgrading to a newer system when this whole mess happened. The new system is supposed to be more automated, built to prevent problems like this, and even cut down processing time by 30%. But unfortunately for Citibank, the system didn't arrive on time to catch this very mistake. I hope you guys enjoyed the video, and if you're new, I mostly talk about business stories, and we'll make more videos like this in the future. So if you're interested, make sure to hit that subscribe button, because I'll be making videos like this every single week. Thank you guys so much for staying until the end of my video, and I'll see you guys again next week.